see. How about now? All right. Hopefully that makes a difference.
It's quite funny. It was almost like I thought you were going to like
I think I just discovered the problem, but we won't let that hang us up.
Yeah.
Okay. All right. So yeah, I want to hear from you guys. Like, what do you think the definition of money is, or what do you?
Well, honestly, I've done a bit of research into this, and I love this now. And for me, money is gold and silver. Currency is a whole different thing. So that's why
you make the distinction between money and currency.
Yeah. I've learned about that one.
Yeah.
To not believe in the fiat currency anymore, the scam of it all, and all that.
Yeah. Yeah, it's definitely like there's definitely funny business that goes on. I think it's good to think critically about what it is, because then you can start to see what might be better, what could be better.
Yeah.
But I've heard it described as in many ways, like it's a way to store favors, right?
Nice.
It's a way to count things. It's a what's that? Right. Yeah. How to store value? How to take something that you've done for society and put it in your pocket for later, right?
It's a medium to help exchange services.
Yes. It's a medium of exchange. You know, if I have a cow and you make shoes, like, how are we gonna do business if you don't need a cow? Yeah. Anything else? All right. Well, there's lots and lots of philosophy about what is money. In fact, they were thinking about it hundreds and hundreds of years ago. Everybody recognize this guy? This is our old friend Aristotle, who was thinking about this way back when, and I think we actually covered it in the room here. Let's see. First thing he decided was that, or postulated or thought about, was that it's a store of value. You know, it's a way to, basically take some value, put it in your pocket, and store it for later, right? The other thing that he said is it's a medium of exchange. So it lubricates society by allowing us to cooperate. You know, we can supersede what's called the coincidence of wants. You know, like I said, if I have a cow and you make shoes, we can't do business unless we have a coincidence of wants, absent money. So money is a medium of exchange. And last but not least, money is a unit of account. And I'm just going to postulate, and I'd love for you guys to challenge me on this, but I feel like the unit of account is the thing that trumps them all. I feel like what humanity is trying to do with money is count the real world. Like, if you can imagine, like, looking around your environment, and you look at various things in your environment, and you're like, well, this phone, that's probably about $200, and this laptop, that's probably about $1,000, and like almost like little dollar signs can pop up around everything that you see. And this is an amazing thing, because if I think this is worth $200 and you think this is worth $210, then we have an exchange, and we kind of define our world in terms of money, and it allows us to cooperate. So we're trying to count our environment. We're trying to count things in our environment, and that allows for a medium of exchange. That also allows for a store of value, right? Because we have an agreement about how much money everything costs, right? And not only does that help us, you know, as we navigate our environment, but it actually allows society to collaborate, right? So if there's a shortage of something, it becomes more expensive, and maybe more people will get involved in producing or providing that thing that's expensive because they think they can do so profitably. So vast resources of society, within society, are marshaled by our shared experience of money, right? So I would hold that the most important thing money does is allows us to count real world things. But I'm open to debate on that. We're going to explore that a little bit. All right. So, you know, today we use this paper stuff, right, to count our real world, right? We've been trained that this paper, if we've got it in our pocket, we can turn that paper into a meal at a little cafe. We can buy a plane ticket. We can basically make the world do stuff for us if we've got this paper. And ostensibly, we earn this paper by doing stuff for other people, right? And you know, we're using this thing called money, but I think the thing to question is, how much integrity does it have, right? If money is a way to count, are we really counting properly? Does math work when it comes to money? Is a dollar a dollar, or a rupiah a rupiah a rupiah? Let's see. Okay, so when money is working in society, you can see that it sets up kind of a ratio, right? Ideally, the money, which is in the middle band there, is a fixed amount, right? Because we're counting the other resources in society with it, right? So if the money in the middle stays fixed in terms of supply, then if we've got too many oranges, then maybe society will decide to make apples. And if there's you know, too few apples, maybe more people will get involved. So the idea here is that we've got, you know, something that's fixed so that everything else that changes communicates the relative needs and wants. Does that make sense? Again, the counting mechanism of money is the thing that I'm proposing is the most important thing, right? And if you think for just a second, if that middle band, if that is also changing, you know, if the apple harvest changes and the orange harvest changes, and we've got a ever expanding and decreasing amount of money, you know, how do we know if we need more apples? How do we know if we need more oranges? It distorts the way society communicates if that middle band changes. And I think today it does. Yeah, I think humanity has forgotten to count. So let's explore that a little bit. What you see here is a quarter from 1964, right? This was the last year that they used. Hello, Kamaya. Nice to see you. Welcome.
Thank you.
This is the last year that quarters contained silver, right? 1965, they took the silver out of quarters. And what's interesting about that is, are you guys familiar with in the United States, they're wrestling over the minimum wage? Have you seen this thing, this minimum wage? They're fighting for $15 minimum wage. Right now it's $7.25, I think.
Wow, they're going to double.
Yeah, well, they want to double it. They want to double it. So today the minimum wage in the States is like $7.25. But anybody know what the minimum wage was in 1964?
$7.
Nope, it was $1.25. So 5 of these quarters you got every hour of work, right? And I'll remind you again that this is the last year that the quarter had silver in it. So we've got this raging debate about the minimum wage. You know, should we raise it? Should we not? What's the right thing to do? Anybody know what a quarter from 1964 is worth today in terms of silver?
It's actually it's almost triple what it's actually worth as a coin.
You mean silver as a?
If you were to melt that and sell the silver, how much would it be worth?
I think it's like 80% silver.
I'm not sure. I only know the dollar value, but I'm
like, because I have seen people do like harvesting. They'll go to
yeah,
the
oh
bank
yeah.
and they'll collect them all.
If you've got a 1964 quarter, it's worth more than a quarter.
Yeah.
Oh, I want to hang on to that. Okay, so I'll answer my own question. The answer is about today's prices. I just looked it up this morning. About $2.99. So if we were to have sound money, or if as humanity we were able to count appropriately, then we wouldn't be having this minimum wage debate, because 5 quarters is worth how much?
$2.
$15. Yeah, 3 times 5, 15, $15. No more minimum wage debate. We could have had the minimum wage at $1.25 and had the spending power remain the same. I don't know how many hours and blood, sweat, and tears people are putting into this $15 minimum wage debate, but humanity doesn't need to have this. It doesn't need to decide this if we can just decide to count. Humanity can count, and just count. Again, count. Like, isn't it funny that humanity can't count? That's the thing that really just blows my mind. Imagine, if you will, if you were a carpenter, and an inch was, next year was an inch 25, and then the year after that was an inch and a half, and then the year after that was 2 inches. Could you build a house? Would the houses get bigger? I'm not sure. Maybe they'd get smaller.
So is it the fear of learning how to count properly is what we're trying to look at here?
Well, there is a priesthood of economics. There's a dogma around how money should work. You know, if we don't have inflation, then the money supply will shrink and commerce will come to a stop. We can't have deflation because deflation will ruin the economy. These are mantras. It is dogma, and I would hold that it's not necessarily true. We actually have examples of a deflationary economy in electronics. You know, I bought a really, well, at the time it was top-of-the-line computer back in 1995 for $3,000. You know, today you couldn't use that computer to do anything. Probably wouldn't even run Facebook. But my laptop costs less than $1,000 now, right? And I still buy laptops. You know, I still buy a new phone. It's interesting that we've had a deflationary environment when it comes to technology, and the technology industry has not withered and died. So I invite everyone to question authority, question the priesthood, ask lots and lots of questions, and wonder with you know, both yourself and with your friends, what would be so bad if money just held its value, right? And of course, you know, we've turned these you know, real money into paper money, and as a society, we have forgotten really what money is. You know, we've been put into a trance, if you will, and it's mass hysteria. You know, you take out this like dirty, bacteria-infested piece of paper out of your wallet, and someone will give you something real for that. It's quite amazing. Quite amazing, the spell we're all under. Here's a little bit of a, you know, if you have 2% inflation, it doesn't really seem all that bad. Oh, 2%, that's not so bad. But you know, every 35 years, that means your money is worth half as much. It's called compound interest. And after 100 years, you can see that $100 has become worth $3.48 in terms of purchasing power.
So again, there's another myth about what the inflation is and how it works.
Yes. I mean, we're taught inflation is good. Inflation is good. We need inflation. We need growth. You know, you can't have unlimited growth on a finite planet. We can't have money grow forever when it's trying to represent the real world, right? So we are in Indonesia, though, right? We're not in America. Does this affect us here as well? Here's 1 rupiah from 1964. That's not 100,000 rupiah, by the way. That's 1 rupiah. Right? This is a real note. Somebody did something real for this note back in the day. Maybe they picked some rice, or they took a tourist on a tour, or they, who knows. Somebody did something real for this note. And however, this note is no longer real to society. It's worth, you know, something like 1/85th of a cent, of a US cent. You know, these things don't circulate anymore. And if that person who earned this note put that note in a box to give to their grandchild, then somehow whatever they originally did has evaporated out into nothingness. how does that happen? Well, you know, there's a systemic leakage, really, that happens. You guys heard about the 1%? Why does the 1% have, you know, 80% of the world's resources? There's a systemic, you know, yeah, okay, here's an analogy. Anybody ever been to Vegas, play blackjack, right? You guys know that the house always wins, right? If you play long enough, you know, they give you all kinds of perks in Vegas, and all they want you to do is gamble. And as long as you're gambling, they know that they will win. You are at a systemic mathematical disadvantage. And as long as you keep playing, the house will win and win and win, right? Maybe you'll have a good time. Maybe you'll be up, you know, and you'll be excited and then down, and it's a wild ride. But in the end, the house always wins. And guess what, people? In the real world, the house also always wins. And that's why we have the great wealth disparity that we have today, at least in my opinion. Smart people can debate this. I'm glad, you know, Paul Krugman is not in the room. He's a very smart man. Ben Bernanke, also very smart. But, you know, if you're super smart and you have a certain worldview, I think you can be smart in the wrong way. And I'm merely questioning, you know, humble me, just asking, is this really what we want to do as society, right? So again, think about it again. If that middle band is constantly changing, how do we cooperate with our oranges? How do we cooperate with our apples? And all of the millions of other things that we're trying to keep track of in our brain, if money, as an accounting mechanism, does not have integrity, right? All right, guys, can we all agree that this is like, you know, we can do better as a society, or at least maybe it's worth a worthy effort to remedy this problem that humanity can no longer count. This is what Bitcoin's all about, and I'm really happy to see a full room of people. It's Saturday morning. You could be slumbering right now. You could be having a nice breakfast somewhere. We're in Bali. You could be, you know, looking out over a nice rice paddy. But instead, you've decided to come here because maybe you have a sense that something is not quite right in the world. And I commend you for inquiring, for taking a look, for saying, something's wrong with the world? You know, maybe we can do something better. I've heard about this Bitcoin thing. I'm intrigued. You know, is it a scam? Is it, you know, are people just using it for criminals, for money laundering, or is there something real here? Is there something good here? Thank you for coming. I think that it's a very good effort to teach the world. Hello, Manu. I think it's a very good attempt to teach humanity how to count again. So let's take a look at this thing. Let's take a look at this thing. What is Bitcoin? Bitcoin, well, the easiest way to begin to think about it is it's just another form of money. You know, most of the people in here have traveled to different countries where they use different money, and if you've used euros or dollars or yen, the first and best way to think about Bitcoin is it's just another currency. You know, if the internet was a country, then Bitcoin would be its currency, right? And it trades just like a currency. You can you know, if you've got a currency converter on your phone, you can convert dollars to Bitcoin, Indonesian rupiah to Bitcoin. And it's the easiest way to think about it at first is it's just another kind of money. But it's money that works in a different kind of way. Most money is backed by government. It's created by government and created by banks through a debt mechanism. Bitcoin works in a different way. It's not backed by any human organization. It's just backed by some computer code running on a bunch of computers around the world. So this graphic is designed to just kind of help you realize that there's no Bitcoin company. There's no Bitcoin CEO. There's no 1-800 Bitcoin support number. It is merely a bunch of computers running the same software code, or at least implementing software code that follows the same rules. And all of those computers create a fabric of agreement about the state of Bitcoin on a moment-by-moment basis. So hopefully that's not too confusing, but we're going to get more specific. I'm going to show you a little movie that explains it way better than I can, so be patient. The other thing to think about in terms of what Bitcoin is well, it's very simple. It's simply two numbers. Don't be afraid by the crazy computer QR code that's up there. What you have is a number on the left and a number on the right. And that is a Bitcoin. You can think about those two numbers as an account number on the left that you can give to anybody. You can send it to your grandmother. You can put it on a billboard in Times Square. You can, yeah, you don't have to keep that left number secret. That is your bank account number, if you will, to use a metaphor. And on the right is your bank account password. Right? That's the thing that you do keep secret. And that gives you the right to spend the Bitcoins that are in your account. So the one on the left is your account number, and the one on the right is your password. And that's a Bitcoin. It seems like crazy technology, and there's a lot of really slick technology behind the scenes. And some people are daunted by the technological aspect of it. But in the end, you can just know that a Bitcoin is just these two numbers, an account number and a password. And you can see that there's not necessarily your name attached to it. There's no really identifying information there. It is agnostic when it comes to identity. And some people think about it like a Swiss bank account. Like you used to be able to get a Swiss bank account, a numbered bank account, and it wasn't really associated with a person. If you show up with the right number, the Swiss bank would just give you the money, right? Anyway, this is similar in that way. Again, it's a metaphor. Metaphors can only take you so far. We're in a new world, and the people that think about these things in a new way will be the ones that pioneer. But just in terms of trying to help you get your head around it, that's an attempt on my part. Okay, another graph. Don't be afraid by the graph. I'll explain to you what's going on here. We looked, if you remember, we looked at the inflation rate of the dollar, right? And the dollar loses its value over time. And what you have here is the something that you can't see with other currencies. It's the total supply of Bitcoin over time. That blue line that you see there is the supply of Bitcoin over time. At any moment in time, the entire world knows exactly how many Bitcoins exist, because all of those computers are all cooperating on the same code, executing the same mathematics. And it's a shared view of reality, a consensus reality, if you will. And everybody agrees on how many Bitcoins there are at any given time. The red line there is the inflation rate. So every 4 years, because of the computer code that's implemented for Bitcoin, the inflation rate is cut in half, right? So basically, inflation is what's incentivizing people to participate right now. So the money supply is inflating in order to pay all those people that are running Bitcoin software. And that is really birthing the entire supply of Bitcoin into existence. And once all of the Bitcoins are in existence, about maybe 40 or 50 years from now, most of them will be in existence, then the inflation will stop. And we will have a finite number of Bitcoins to use to count everything that exists in the world. So we should have a very stable price for everything in existence. So if you have a mobile phone, and maybe at that point in time, a mobile phone will be worth, 0.005 Bitcoin. And it should remain 0.005 Bitcoin over the course of your lifetime, unless somebody can figure out how to make it cheaper or faster or better, right? The things that people really care about will affect the price, not some arbitrary inflation rate that a government or a central bank has decided on, right? And I'm really curious to see what that world will be like, because once that world arises, humanity will be able to count again, right? We'll be able to plan. We'll be able to get involved with the, with the needs and wants of the entire planet. We'll be able to see if something's very expensive, we can tackle that problem and try and make it less expensive, right? And the the relative expense will show our progress, right?
So, can I ask you a question?
Okay.
Because if we were producing the same amount of stuff and there was the same amount of people, and we had the same amount of Bitcoin, that would make sense to me. But it just occurs to me while you're speaking that we're getting a logarithmic expansion of things to buy, or even electronics, right?
Yes.
And people, for that matter.
Yes.
So if Bitcoin holds the same number, let's say we had 100 Bitcoin, just making up a silly number.
Well, we're going to end up with 21 million. That will be the total supply.
Let's have that in people's heads. So 21 million is the flat point, and then we've got more stuff to buy with it. Bitcoin will actually be becoming more valuable, and actually it's counting in the other direction. Like money is going down in value. Bitcoin will become more of a scarcity, and it'll be, one Bitcoin will be worth more in 5 years than it is now.
Yes.
So wouldn't it actually make sense to have it continue to grow and almost match something, whether it's electronics or population growth or something?
Yes, that's a very good question, and that's actually what modern day economists say that we need to do in order for the economy to function. And that's how they justify inflation. They say the economy grows, so we need to grow the money supply at a similar rate, right? So that's the argument they make. It's a good argument. Very smart people can represent that argument very articulately. And that's the world that we've always lived in.
So they're screwing with the formula, so I don't know if I trust how they're doing that.
What's interesting is about Bitcoin is we will have 21 million Bitcoins. However, we'll have an infinite number of divisions of the Bitcoins that exist. You can break a Bitcoin into 100 million pieces. And so the money supply can actually grow to the right of the decimal place, and we will be able to represent everything by dividing Bitcoins more and more amongst the things that already exist. So, and we can do that without devaluing the money. So once you earn some Bitcoin, you can give it to your grandchild without any fear of it debasing. Society can create more smaller and smaller representations of everything that we need to represent with money in the world. So it's actually infinitely divisible and can grow to meet our needs to infinity. Does that answer your question?
I don't understand still.
And beyond, also.
No, okay. Let's
say division is like the sense of the Bitcoin.
Yes.
But then indeed the question remains the same. When we grow, when we produce more products, how do we fit into the overall of 20-something million Bitcoins?
Yeah.
Because if you divide it further, then you say that then it should have less value a product, right?
It will, the value of Bitcoin will rise, right? Over time, the value of Bitcoin will rise as the demand for it increases. It's just basic supply and demand. But because it's infinitely divisible, you can represent as many things as you want to in the real world. We'll just be dividing that. And that's why the relative value will go up, because we're dividing it amongst more and more things.
Right. But
this is an idea that takes a while to soak in, because we're not used to.
As a consequence, then this phone will be represented in Bitcoin, so it will not have the fixed value, like you said, 0.05. It will also change the value.
It'll get more and more inexpensive versus Bitcoin.
Okay, so
it will go.
So like today, so it's not fixed.
No, we're trying to fix the money. Everything in the real world varies, and we're trying to find a way to measure that. So we're creating a fixed supply of money, so that when these things change, we can see it, right? If money's changing and the number of cell phones are changing, then we can't see the relative difference. So we're trying to create one thing for humanity that's fixed, that we can count everything else with.
And then price of everything will actually decrease over time, because money's limited.
Should do, yeah. Unless there's a shortage, like if there's a shortage of apples, they will go up in price, and that will signal to society, hey, we need more apple farmers. And actually, it will allow humanity to cooperate, because we'll be able to see that there's an apple shortage. Right now, nation states will devalue their currency in order to make their exports more attractive. And it may seem like you're getting a better deal on an oven, but really they've kind of taken money from their own society in order to give you that oven for less money. And these kinds of things happen.
Yeah.
Okay, so at this point in time, I'm trying to show you how Bitcoin works, I'm going to show you a little movie that does a way better job than me. So bear with me here for a second.
Just asking some more questions about that after.
Okay. Yeah, we're gonna have lunch together, and like I'll spend as much time as you guys like discussing it. These are new ideas, and sometimes it's like, oh, my head hurts. Like I don't get it.
How was this number selected of 20-something million? Why?
And who selected it?
The bankers.
There were some.
Who's in charge of this racket? Come on.
It's a little bit arbitrary. There are Bitcoin competitors. They're like 21 million. That's not enough. We're going to make 800 million. And those cryptocurrencies, they're calling them, are in a competitive landscape with Bitcoin. And if that ends up being a better number, then maybe we'll be using something besides Bitcoin in the future. But these are things that we're going to see what works. But we now have a competitive landscape for money, which we've never had before.
And sorry, is that not just recreating the exact kind of thing that we're trying to get away from? Recreating the inequalities of the currency system.
Well, it doesn't solve all problems, but it solves one very fundamental basic problem, and that is understanding what the that's not to say that people aren't going to try and game the system or create supply of high-frequency trade, keeping the separated funds. In fact, all of that stuff is happening. So we have to be careful that we don't just recreate the same problems that we have already. But there's one problem that they can't. There's one solution that they can't take away, and that is the transparency of the money supply. We don't know how many U.S. dollars there are. We don't know how many Indonesian rupiah there are. And yet we're supposed to make a decision about how much a villa costs. I mean, there's a global bubble in real estate, and I would not buy a house if you, well, I wouldn't buy a house because I don't think the world knows what houses cost. We've created so much money in the terms of home loans that it has inflated the price of houses. We've had the interest rate held artificially low since 2008. And you know, anyone who buys a house now will probably find that their house is not worth as much as they thought it was when they bought it. That's my opinion. Let's talk about it. But let's before people fall asleep just listening to me droning on, let's play you a little movie. I think you're gonna dig this. We can bring it up. Let's see. Where is my window? Wait, there we go.
Bitcoin is digital currency and computer software. Capital B Bitcoin is the shared code that creates a global payment network using computers connected to the internet. Bitcoins are virtual currency, digital money created, stored, and exchanged on that network. But unlike virtual dollars created by a banker, this new currency was created with math by an anonymous inventor. Bitcoin is an open source software protocol like much of the code supporting the internet and email. Open source means anyone, everyone can use the protocol. No one person or company can control it. Every change to the software is public, open, and transparent. The code was first developed by Satoshi. Then there were dozens, now hundreds of programmers constantly collaborating to improve Bitcoin's features and security. So what makes Bitcoin a breakthrough? It tackles an ancient human dilemma and solves a computer science problem. Any shared information or data can be flawed, corrupted. Anything can be faked. How do we know that what we're receiving can be trusted?
In our traditional mindset, it's very important to know who is behind this currency because their reputation is significant in knowing that our funds and the true wealth is actually safe.
In finance, we rely on trusted third parties like banks, credit card companies, remittance services. They keep track of money as it moves from one account to another, and they charge us handsomely for it. We trust that their digital ledgers of credits and debits balance. A financial system that cuts out these middlemen could be faster, cheaper, and more secure. But Bitcoin is digital. Music and movies are easily pirated, copied, stolen. How can a digital currency retain value if anyone can make 1 million copies? The answer is at the core of Satoshi's invention. A Bitcoin is not a file on a computer. It's an entry in the publicly distributed database called the blockchain. Just as the meta-sheet kept a ledger of credits and debits, today's banks record each transaction as a plus and minus in their ledgers. Now we call them databases. Bank accounts are replaced by a digital wallet that you alone control. Bitcoin's ledger is the blockchain, a record of every Bitcoin in existence and every Bitcoin transaction ever made. It always balances because no Bitcoin ever leaves it. When a Bitcoin is sent from one digital wallet to another, what they are really sending is control over that part of the database. Code that is a unique key for the new owner. As the network processes transactions, it constantly synchronizes the one ledger across the global network. Each computer or Bitcoin miner has a complete and identical copy. And because the blockchain is public, it cannot be controlled by any one person or computer. Owners of the Bitcoin mining computers are rewarded with new Bitcoins for processing transactions and keeping the network secure. In other words, the Bitcoin network replaces banks and bankers. Today, the combined computing power of this global network is greater than the 500 biggest supercomputers combined, times 10,000. And because every transaction is verified and recorded by the network, a Bitcoin cannot be forged. Digital currency cannot be debased with cheap metals or printed by the billion at will. Too much currency can unleash a monster, skyrocketing prices, trillion-dollar bills that can't buy a loaf of bread.
There's a big movement in the US demanding that the Fed be audited so we can find out what they're doing. Nobody really knows how many dollars are in existence, for example. Ben Bernanke created several trillions of dollars in the last several years, and nobody really knows where they landed.
At any time, for any reason, the central banks can print as much money as they want. They call it fancy things like quantitative easing. And when they do that, it makes the dollars or euros or yen that you and I have worth less. So if the world starts using Bitcoin as their currency, it can't be controlled by central bankers or politicians.
Remember, central banks create money to boost the economy and try to pull it back out before inflation heats up. But no one knows how much magic money global banks are creating to boost their profits with questionable loans.
Bitcoin's completely the opposite. It's totally transparent. You know exactly how many exist.
The computer code behind Bitcoin has a built-in brake pedal, cutting the creation of Bitcoins in half every 4 years. This ensures a transparent, controlled scarcity, and ultimately limits the total number of Bitcoins to 21 million. No lobbyist, no politician, no banker can create more, or change the mathematical rules dictating their creation.
That's accountability. And that's what I think is most exciting about Bitcoin and the technology behind it, is not so much that it will supplant the dollar or that it will supplant government itself, but that all of a sudden there's a competitor to the government, and the government itself now needs to look over its shoulder more than it did.
This new digital currency can be purchased online with a credit card or in person with cash. And it has the 5 key characteristics of money. But is it a store of value? Is it stable? Or will it diminish over time, like a commodity rendered useless or a crop that fails? The ultimate power of a cryptocurrency is unleashed by mainstream adoption and an ever-growing volume of transactions.
All right. Questions?
So that's the thing, isn't it? Is it going to be over in 2,000 years going to be still holding its value? That's the key to it all.
Yes, yes. It's a grand experiment, and there are no guarantees. And I would never advise anyone to put their life savings into Bitcoin. But and you know, there will probably be things that come along behind Bitcoin that solve the problems that Bitcoin encounters. And yeah, we live in that new environment where we can do that kind of experimentation, which is really exciting.
Yeah, so what happens if someone consolidates a lot of Bitcoins? Like in any resource, if someone has a lot of them, he gains power over it.
That's true. In fact, you know, like I said, Bitcoin exists, and there are lots and lots of competitors to Bitcoin. And one thing that we've learned is that the hardest problem to solve with creating a new currency is figuring out how to give it away in a fair way. In this case, they reward the miners that are participating with the inflation of Bitcoin. They have a reward for participating, and that's Bitcoin's way. But there was an experiment that they did in Iceland. And in fact, they had that very criticism of Bitcoin, like we don't know who owns all the Bitcoin, and what we're going to do is we're going to do something fair. We're going to give everybody in Iceland who has a social security number a new coin. Aurora coin is what it was called. You can look it up. And they created the coin, and they gave an equal amount to everybody. And they said, okay, this is way better than Bitcoin. You know, it's more fair. And what happened was that as soon as Aurora coin had a viable exchange rate to Bitcoin, everybody converted their Aurora coin to Bitcoin, and Aurora coin was no longer valuable. So you have this kind of, well, strange things happen, counterintuitive things happen when society and human nature and human greed and human whatever get involved. And you're right, it's something to be aware of. You know, when they were first starting Bitcoin, it was very easy to just turn on your laptop and make, you know, 100 or 200 Bitcoins a day with your laptop. And when they first created it and they were first experimenting with it, those early developers have tens of thousands of Bitcoins. They're multi-millionaires on paper in terms of Bitcoin. And yeah, who knows? Maybe they will try to use that wealth to influence the system going forward. We're not sure.
But can you hold back on your amount, and then maybe you're like a central bank? Because every time you want to influence in a certain way, you can distribute your money.
Yeah,
your Bitcoins.
And that's true.
And there are some. I didn't get the mining. Maybe we get to that or later on.
Well, I mean,
there's like farms in China. I saw a documentary. They have, I don't know, thousands of computers.
Yes, this is a legitimate concern. You know, Bitcoin is supposed to be this decentralized, democratic money, yet there are organizations out there that have raised tens of millions of dollars to buy huge data centers that are doing nothing but mining Bitcoin. And Bitcoin depends on diversity, you know, on a varying number of people maintaining the rules so that the integrity of the system is maintained. And well, people understand that potential flaw. And if it were ever perceived amongst the Bitcoin community that someone controlled more than 51% of the network, then the value would probably evaporate because people would lose faith in the integrity of the money. And that has almost happened on occasion. And there is a voluntary reduction in individual power because they realize if anyone sees that there's a centralization of power, that the faith in the currency will disappear. So it's
only if they have an alternative, like real money, or maybe a different Bitcoin, right?
Yes.
Like as it's in the digital world, like Facebook, there's no other Facebook because everyone just wants to use Facebook, and even we know they screw us in many ways. We just still use it, right?
Yes, but now it's incrementally better because before we just had the dollar or the euro, and now we've got Bitcoin, and there are hundreds of other competitors to Bitcoin. So we do have a more competitive landscape than we used to, but so far Bitcoin is by far the most. It is the Facebook of cryptocurrency, and the next one is you know, about 1/6 the size. So But yeah, you're asking great questions. I mean, these are the questions that we need to ask as we try and solve the problems that I identified at the beginning. We don't want to create the same problems that we have already. And definitely you're thinking in a critical way, which hopefully everyone will do. I mean, if everybody's thinking critically about the money that they use, then maybe we'll get something good, you know?
I kind of like to extend on that question. It's what I was writing down here to talk to you afterwards, but I think it's really one of the questions that's funny. It's like, like let's say Rockefeller and DuPont, the family who own, I don't know, 99% of the world's wealth or something, at least 90%, just those two families, right? Something like that. If they just bought over half of Bitcoin, then the rest of us to trade would have a fraction of that to work with. And then that would drive up the price, like you're saying, it's like playing the loser thing. And then we'd be buying a phone for, 50 cents instead of, or 50.5 instead of 1 Bitcoin, for example. I'm just making numbers up, right? And then after a little while, they could sit on that, and then they could release whatever. And actually, it could amplify the logarithmic difference between the haves and the have-nots, isn't it possible?
Well, so if I could just repeat your question.
Yeah.
Why isn't some Bill Gates or the DuPonts or the Rothschilds or someone with a ton of money right now go and buy up a lion's share of the Bitcoin and co-opt it and take it over? Good question. And someone could have that idea. But one thing to understand is that only about 3 to 5% of all the Bitcoins in existence are trading at any one point in time. So if someone were to try and amass a Bitcoin fortune, they would drive the price to the stratosphere. You could not get a significant portion of the overall Bitcoin without moving the price of Bitcoin in a huge way. And that's a kind of a subtle point, but it's something that traders know. They look at the market depth. How many Bitcoins are for sale? There's about 15 million Bitcoins right now, but there's only a few 100,000 for sale at any given time. And if somebody tried to buy all of the ones that were on sale right now, the price would go up exponentially. And then they would only have that 2%, and then the price would be exponentially higher. And maybe more people would put their Bitcoins on the market. They'd want to take advantage of that, but it would be
like
very difficult.
And run on Bitcoin, not in the get my money out, but run to buy Bitcoin.
And because it's a public ledger, everybody's watching it at all times, all day, every day. The news would get out that somebody was trying to do that. It would be evident. The worldwide community polices itself, watches itself, constantly commenting. Get on Reddit someday and you'll see like some vociferous forum action. But it's keeping us, it's keeping Bitcoin safe. There's a lot of stewards of Bitcoin. And they're all asking great questions like you're asking. They're all like, is there centralization in mining? Is there centralization on the development team? Is the development team being co-opted? Who hired the developers? There's like, if you can think of the question in this room, I guarantee you can get on Reddit and someone's like, hey, well, what about this? And it's fascinating. It really is the world trying to solve this problem. And it's not a company. It's not an individual. It's like this hive mind. It's really a fascinating phenomenon. Question?
So would you say that sort of like the Bitcoin revolution is like, on the one hand, it's providing this like stable valuation of everything, right? Then on the other major component is the competition between different. So it's like if the dollar, like I don't have to use dollars, I use Bitcoin. So it's not that the goal is for everything to become Bitcoin. Is this right? Right?
Yeah.
But that more that you different options, and then people like governments, whatever, have to maybe become transparent to compete with the other cryptocurrencies. Okay.
Yeah, it's humanity's attempt to solve this counting problem that I described.
Yeah.
And it is a de facto competitor to the status quo, which will force banks to be more transparent, government to be more better stewards of their currency. And ultimately, it's a way for humanity to get something better. And that something better might be Bitcoin, or it might be, Ubud coin, or, who knows what humanity will settle on? But we now have a competitive environment, and humanity is trying to solve this problem for itself.
So how many active buyers are there?
That's a good question. It's not really known. You can see all the Bitcoin that's transacting, but I could have 100 Bitcoin addresses or 1,000 Bitcoin addresses. So you don't know if 1,000 addresses is 1,000 people or one person.
So is there a ballpark?
Well, there's lots of different metrics, but you have to divine what that means, really. So I can tell you there's about 7,000 Bitcoin merchants. There's about 5,000 Bitcoin nodes running Bitcoin software and keeping track of the ledger. I think one of the big wallet makers, like the people that allow you to walk around with Bitcoin on your phone, has tens of millions of wallet installs. So it's definitely a worldwide phenomenon. I mean, this thing, the train has left the station, and this is working. You know, and you're going to see later it working on your own phone, and you're going to see it kind of performing the function of money in this little bubble environment that we've created in Ubud, where you can actually live on Bitcoin. That's the experiment, right? But yeah, time will tell. More questions?
So is that the point? So you're trying to make Ubud a currency-free?
Not currency-free. Really just can Bitcoin perform the function of money in a physical location is the experiment. So we get together every week and talk about the macroeconomics and how Bitcoin fits in. We collaborate on trying to get our favorite merchants to accept Bitcoin. You guys are here on a Saturday morning. All of you will have a Bitcoin wallet, and next week maybe you can be out buying some jewelry or renting a scooter or renting a villa or buying lunch. And yeah, little by little.
So how many in Ubud at the moment take Bitcoin?
Well, let's take a look at a few things here before we get into the practical side of things. Just a moment. Here we go. All right, so here is a map of the world. And you can see you can see it's very popular in the United States, very popular in Europe, and here we are down in Bali, and you can see Bali is actually outshining Jakarta, Singapore, Bangkok. We've got a big thing going on here in Bali. Let me just zoom in here. There we go. So there's about 25 Ubud merchants, 22 down in Kuta. You've got a few hotels in the north part of Bali. And anyway, does that answer your question? Give you a bit of an idea.
Where's this data coming from? Like, how do they know where those coins get traded?
These are not coins. These are just merchants that have self-identified as accepting Bitcoin. But we can always look at the blockchain and see things going on. It's an economist's dream. You don't have to speculate about the velocity of money. You can actually see it, which is fascinating. Yeah. Okay. So we're at the hour. I think this concludes the why of Bitcoin. We're going to take a little break, and then you guys are going to get out your phones, and we're going to do something practical. So I'm going to go ahead and sign off for the people at home here. Thanks for joining us, and hopefully we'll see you in person next time.
And one thing that's cool about doing this,